From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Live from the Rose Garden at the White House, speaking for the better part of an hour, President Trump finally putting some facts down when it comes to tariffs and what he dubbed Liberation Day, a massive ceremony with a flag-draped colonnade outside the Oval Office, where the president now stepping down from the stage where they had set up a desk, presumably to sign some executive orders. He may be on his way there with a crowd that is full of dignitaries as well as workers in hard hats. We'll keep tabs on this as he now seeks to put pen to paper, signing executive orders for reciprocal tariffs, announcing baseline tariff rate of 10% for all countries. Effective at midnight, we'll have the 25% tariff on foreign autos. Reciprocal tariffs will take effect later. Some of these will take effect over the next couple of days this weekend, and then later next week, reciprocals on the 9th of April, according to the White House. I'm Joe Matthew alongside Kayleigh Lyons in Washington, a couple of minutes ahead of our normal start time for Balance of Power. Kayleigh, we finally have some, if not all, clarity on what's going on.
Indeed, as you mentioned, a 10% base rate on all trading partners will be imposed, and then other countries will face additional charges, reciprocal charges, that include non-tariff barriers in the White House calculation. That the White House contends it is being lenient here by charging those countries a reciprocal rate only half of what the U.S. has calculated is charged on U.S. imports by those countries. So some examples from the graphics that the White House included in this announcement. China will face a rate of 34%. Obviously, that is materially higher than the 20% tariffs, which already were in effect on Chinese products. It'll be a 20% rate on the European Union, 24% tariffs on Japan. For Vietnam, the reciprocal rate is 46%. And of course, Joe, we are seeing markets react in accordance with this news, as you are seeing currencies and stocks, at least futures, on the move.
There is a 10% club here. The UK, Brazil, Australia, Saudi Arabia, among those countries with only that baseline tariff, Kayleigh, as opposed to the reciprocals. President Trump now, if you're with us on Bloomberg Radio, holding up the binder here to show the signed executive order that makes this official. As we heard from the White House a bit earlier, Kayleigh, tariffs going into effect April 5th on the baseline at 12:01 a.m. April 9th at 12:01 a.m. We will have the reciprocal rates taking effect on the countries that we're discussing.
But notably, two of the countries not included in this new regime are our two North American trading partners. Canada and Mexico will not be subject to these reciprocal rates. Instead, the USMCA exemption for Canada and Mexico will remain in effect. Remember, there were 25% tariffs placed on all imports from those countries, but those that were compliant with that trade deal were exempted, and that is expected to continue. Hence the reaction we are seeing in the Mexican peso, which right now is at the session high against the U.S. dollar. And we want to have more on that and the wider market reaction now and turn to Bloomberg's Romaine Bostick live from New York. And Romaine, obviously, initially markets reacted kind of positively to what they thought might be just a 10% flat rate, according to some reporting that came out, but very quickly things turned around.
Yeah, we actually had a really nice rally in the post-market, Kayleigh, kind of an extension of what we saw during the cash session. But once Trump actually held up that list of tariffs, it was hard to read. But of course, our folks here at Bloomberg did a great job of really going through those numbers. The main thing that jumped out to traders was, quite frankly, there weren't any real exemptions or carve-outs. You mentioned the USMCA. That's really the only one here. People were looking for carve-outs not just on a country basis, but more importantly on a company and sector basis. When they did not see that, you saw a huge turnaround in the market. Futures went from being up 1% from where they closed at the 4 p.m. close to being down more than 1% from that 4 p.m. close. And it is the industries moving lower that you would expect. Some of the big tech names, like an Apple, like an NVIDIA, some of the automakers, like a GM, like a Ford, and of course, a lot of companies in the materials and the energy space also taking a bit of hit here. Remember, it's not really clear right now, Kayleigh, what the actual impact is going to be. Will this actually hurt their business long term? Is there going to be some mitigation effort by those companies to, I guess, defray those costs? That is still the unknown. And if you were looking for clarity today, out of what we learned out of that White House event here, at least based on what the market's pricing in, we did not quite get it.
All right, Bloomberg's Romaine Bostick, thank you so much. We'll continue to check in with Romaine, especially when we get the formal open of U.S. Futures at 6 p.m. We'll be watching the market reaction to the news we got, but we want to get more on this news and turn to Bloomberg's Washington bureau chief, Peggy Collins, who is here with us in our D.C. studio. So, Peggy, obviously, we knew that the president was considering a few options leading up to today, one being blanket rates on everybody, the other being targeted rates. Turns out he decided on both, kind of.
That's right, Kaylee. And I think our reporting in the last couple of days and others was really around the fact that this was a fluid situation for several days leading up to this big announcement. And as the president said this afternoon, this is something he said on the campaign trail that he was going to do, and he feels like he's delivering for the American people. But some of the people that we've got reaction from in our reporting right out of the gate this afternoon after the Rose Garden announcement is that it goes beyond expectations that even some people were thinking over the last few days, when they were talking about a possibility of a tiered announcement, a possibility of more investigations. This is a targeted 10% rate across the board, but then certain countries are seeing even higher rates. So again, a lot of the reaction we're hearing so far is that this goes beyond many people's expectations.
Interesting to hear that both Donald Trump was correct when he said that we would be relatively kind to some of our trading partners. You see reciprocals half in some cases of what they're tariffing the U.S. But Scott Bessent was always also right as well, saying we're going to start at a high level and then potentially pull things back when we see concessions. Is that going to be the story in the days ahead?
I think in part, but I also think this is so wide-ranging that part of the story is going to be how this impacts the global economy and whether or not it really does reignite inflation. The administration has said we have other things in place like energy initiatives and things like that that will counter-effect some of the impact of the tariffs. But we've talked to a lot of economists, and certainly the Fed is watching this very closely in terms of whether or not we'll see sustained inflation or even higher inflation, which is something that the economy has been battling since the COVID pandemic.
Well, and this is all just as we try to assess the economic impact of the tariffs the U.S. is charging on things it's importing. We still will have a massive question as to how the countries affected by today's news are going to decide to respond.
That's right. And we have, up until this point, been reporting a lot, as you know, on the president's relations with allies like Europe. But today we saw that China and other countries in Asia, including India, are certainly impacted. So we'll see some reaction from some of the countries that we've been talking and reporting a lot about, Canada, Mexico, Europe, but now Asia is certainly in the target range here as well. I think also the administration has said from the beginning that it sees tariffs as a revenue raiser. So that will be another thing to really watch. Like, is this something that really does raise a lot of revenue and therefore allow the administration to follow through with some of its tax cuts, which are coming around the bend, as we know very well in Washington?
If Secretary Bessent is correct and some of these levies may come down if countries respond accordingly, are we going to have a parade of world leaders through the West Wing in the days ahead?
Well, I think we've seen a parade of world leaders since November who are going to Mar-a-Lago and to Washington. So I think that will certainly continue. Companies that are affected, of course, the auto industry is one that our team's been reporting on, and we'll continue to follow the impact on the auto industry and auto sales. And we have jobs numbers coming out on Fridays, and Powell speaking in the afternoon. So more to come.
Bloomberg's Washington bureau chief, Peggy Collins, with breaking news here from the White House on tariffs. Thank you, Peggy, for the insights. President Trump sharing remarks as we just brought for you. And we turn now to a potential reaction from Canada to this afternoon's announcement. Doug Ford, the Ontario Premier, is with us now on Bloomberg TV and radio. It's great to have you with us, Mr. Ford. You've called this Termination Day instead of Liberation Day. What will be the response now from Canada?
Well, let's see where these tariffs go. I'm cautiously optimistic that I never saw Canada or Mexico on that list. And it just goes to show you two great countries working together, collaborating together, and building relationships. So it's, I'm cautiously optimistic. I think it's, if that's the case, it's the right thing for both the U.S. and Canada.
Well, and considering Canada was not on that list, we understand the existing regime is in place. So the tariffs that are in place with the exemption of goods that are USMCA compliant. Does that mean, sir, at least in your mind, that it wouldn't be appropriate for Canada to retaliate for this at this time?
That is correct. If that's the case, then I would highly recommend to the Prime Minister not to retaliate. and let's carry on a strong relationship. Let's build the AMCAN fortress, American-Canadian fortress, around both countries and be the wealthiest, most prosperous, safest two countries in the world.
You've suggested that Canada would bring down its tariffs if the United States did the same. Does this turn into a game of chicken? Do you believe that the White House would respond accordingly?
Well, I hope so. We're neighbors for the last 200 years, and when we show good faith, or the U.S. shows good faith, you have to follow. This is a partnership that's going to go on for hopefully several hundred more years and decades to come, and we have bigger concerns, both Canada and the U.S., than each other. We have to keep an eye on other countries like China.
Who makes the first move in a game like that?
Well, we'll work collaboratively with the administration and with our prime minister, and he'll be speaking to President Trump, I'm sure, over the next day or so, and we'll be working with Secretary Lutnick and to get a clear picture of what this means for Canada.
What about what it means for the auto sector in particular? Because, of course, we learned last week that the president would announce what he made final today, which is that 25% tariffs on auto imports will be going into place. Obviously, parts are going to be included in that eventually, sir. So what impact do you expect that alone will have, even if tariffs on or reciprocal tariffs were not applied to Canada today?
Well, I just hope there's no tariffs on auto, because parts go back and forth across the border 7-8 times before they get assembled either in Ontario or one of the states, be it Michigan or other U.S. states. It's a system that works and has worked since 1965. I've always said you can't unscramble an egg that's been around since 1965. You have to make the omelet larger. And we're just so much stronger together. We buy as many vehicles as we sell down there. And the ones that we ship to the U.S., 50% of that automobile is U.S. parts. So I think the system is working. It's working well for both countries, and it's a great system. Especially Canada is buying 400% more vehicles off the U.S. than Mexico does, 200% more than any other country in the world. We have an incredible relationship with the two great countries. They're so integrated on many different sectors, but even the people are integrated. Millions and millions of Canadians and Americans travel back and forth across the border. They have family members on both sides of the border, and we just appreciate. And Canadians love Americans. I love Americans. I love the U.S. I spent 20 years of my life there, and I have a tremendous amount of respect and friendships with our American counterparts.
Well, it's interesting to hear you say that, Premier Ford. You've been really careful from the commentary that I've heard to direct your remarks at the Trump administration, at the president himself, as opposed to the American people, suggesting that you're looking to reset our trade relationship here on a more positive level, maybe in a post-tariff world. But we've also heard from the prime minister that our trade relationship as we know it is over. Which is true?
Well, I believe in never getting personal with anyone, no matter if it's President Trump or Secretary Lutnick. We'll talk about the issues. We may go back and forth. It's no different than family members around the table. You may disagree, but at the end of the day, you come out united and stronger than ever before. Because again, there's a lot of people that don't see eye to eye with the U.S. and Canada, and especially how close we are. We'll need each other for many years to come.
Well, and when we consider the various figures in the Canadian government, you yourself included, obviously there are many people in the Trump administration who have had a hand in shaping these policies. I know you've been in contact with the Commerce Secretary, Howard Lutnick, in particular. Do you believe he had a role in making sure Canada was not included on that list today?
Well, I'm really hoping. I have a very good relationship with Secretary Lutnick. I have a tremendous amount of respect for him. He's an extremely bright business person, a very shrewd negotiator. That's his job, and I understand that. And our job is to make sure we protect Ontario jobs and Canadian jobs as well. But again, we're so integrated, everything from travel to, commerce and everything in between.
When we consider the way forward here, Premier Ford. Is it going to be on a national level here, or will it be by the provinces? Is this something that you've discussed with the Prime Minister?
It will always be on a national level. The Prime Minister will lead these negotiations, and hopefully we can sit down and either get a USCA deal or renew the USMCA deal, and that would be up to President Trump but our Prime Minister. I'm the chair of the premiers. It changes every year, and we have a great group of premiers, and the Prime Minister listens to what we have to say.
But if your voice will be included in this conversation, what would an appropriate renegotiation of the USMCA agreement actually look like? What changes would Canada be willing to accept?
Well, I thought the USMCA deal that President Trump put together and said it was the greatest deal ever, I'd love to see that stay the way it is. I want to increase trade, and be it the critical minerals that China has cut the U.S. off, be it the high-grade nickel or other critical minerals that the U.S. can't get. There's no one else in the world I'd want to give them to more than our closest friends and allies. That's the way we should operate, in my opinion. We share the same values. There's no two greater countries, an unprotected border, the longest in the world. That's the way it's been for years, and it's worked. And I'd love to see it continue to work.
Well, so how, I guess, in the end, do you feel, Mr. Ford, about what we heard today from the White House? You could frame this as could have been worse. You could also feel betrayed by some of the comments that President Trump delivered. How would you describe?
Well, I never take anything personal, be it from President Trump or anyone else. I understand he's a business man, and that's the way he conducts his business. And fair enough, he has a job to do. We have a job to do, and I think any negotiation, we meet in the middle and make sure that we grow two great countries and make them the strongest in the world, that no one can touch us. We'll ship down all the critical minerals. We'll ship down all the oil that you need and electricity, anything that you need. We have more natural resources than anyone in the entire world. And again, there's no one I'd want to ship it down to more than our great friends and allies.
Well, finally, as you raise natural resources, we do understand, based on an official that briefed reporters, that coming later, expected shortly, in fact, or possible soon, could be action specifically on lumber, as well as critical minerals, which you just mentioned, with Section 232 tariffs possible soon. What response would you have prepared if indeed those go into place?
Well, I think we've had this lumber war been going on, it seems, for decades, but majority of the homes built in the U.S. are from Canadian lumber. It would jack up the cost of homes immediately. That's the same as the auto sector. It increased the cost of the American people to buy an automobile. Pharmaceuticals, same thing. Seniors that are relying on low-cost pharmaceuticals, that would go up as well. These are areas that I believe would be beneficial for both countries to move forward and work together and be very cautious when we look at any tariffs on any of those three sectors.
All right, Doug Ford, the Premier of Ontario, thank you so much for joining us with reaction to this announcement we just got from President Trump in the White House Rose Garden. And still ahead, we'll examine the economic impact of the president's moves on tariffs with Danielle DiMartino Booth of QI Research. She's next on Balance of Power on Bloomberg TV and radio.
At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating. So we're going to have a minimum of cheating, and we're going to be very severe on the people that at the gate that watch the tariffs and watch the product coming in, because there's been a lot of bad things happening at the gate.
President Trump just moments ago at the White House, announcing his long-awaited plan on reciprocal tariffs. Welcome back to Balance of Power, an extended edition here on Bloomberg TV and radio. Joining us now for analysis is Danielle DiMartino. She is CEO and Chief Strategist at QI Research. So, Danielle, just to reiterate what we've learned this afternoon, a 10% blanket tariff applied to U.S. trading partners, though there's an exemption for Canada and Mexico, which are dealing with their own regime. On top of that, a reciprocal tariff rate on some of our largest trading partners. For example, the rate on Chinese goods will be 34%. How close to the worst case scenario is this?
First of all, Kayleigh, thank you for having me on this afternoon. And I think that because there was nothing truly consistent about this rollout, each country truly is affected differently and to a higher degree than what I think many were factoring in. I do think that this is on a spectrum towards the worst end of what was being anticipated. We're seeing that in the price of gold. We're seeing that in the benchmark 10-year Treasury yield as well. And for heaven's sake, certain companies like Restoration Hardware, that's now down 23% in aftermarkets trading.
So what does this mean for companies that don't know exactly how to react? It's unclear how long these tariffs are going to be in place. Do you start moving supply chains now? Do you start investing in reshoring manufacturing facilities? What are you hearing from companies about how seriously they're taking the long-term impact here of this tariff regime?
Well, you know, we've just seen a raft of regional Federal Reserve surveys, and all of them showed depressed capital expenditure plans. And that's a huge reversal, by the way, from what we'd seen as recently as December. There's such a high degree of uncertainty that I think many American companies are, and rightly so, paralyzed right now. We do hope to hear more carrot and less stick from Treasury Secretary Scott Bessent. I hope that some clarifications are coming here in a matter of days in order to reduce the fear factor among companies. Of course, the United States economy has survived declining consumption in the past, but we have never not gone into a recession in the event.
What needs to be clarified, though? What detail did you miss today from the president?
Well, I certainly think that we missed, as you pointed out, the longevity, the duration, how long these tariffs are going to last. And prior to being confirmed, Treasury Secretary Bessent also stipulated that there would be a several-year on-ramp period during which American companies were given a grace period, if you will, to reshore. You can't pop a factory up overnight, and it takes a very long time to move supply chains. I think that there would be a lot more certainty if American companies knew that there was also going to be a continuation of friendshoring policies such that they could continue some of the developments that they've started in Canada and in Mexico.
Well, we just got the formal fact sheet sent over from the White House. It reads in part, Danielle, these tariffs will remain in effect until such a time as President Trump determines that the threat posed by the trade deficit and underlying non-reciprocal treatment is satisfied, resolved, or mitigated. So I guess the timeline is a little bit unclear if those are the terms with which we are thinking about these tariffs coming down. In the meantime, what effect would you really anticipate that these tariffs would have in the immediate term versus the more medium term, given all the front loading and building of inventories we saw companies engaging in anticipation of an announcement like this one?
And you're right, Kayleigh. In fact, the Logistic Managers Index that we saw released yesterday showed that there is now an unwanted, involuntary inventory build. The ISM report that came out yesterday said that many companies were beginning to cancel orders or delay purchases. And my greatest fear is that because of the known, and that is that we are going to see higher input costs, and the unknown, we don't know as a company what our pricing power is, that companies are going to continue to be preemptive in cutting costs ahead of these tariffs being imposed. We've already seen in the first few months of this year an acceleration of private sector layoffs. Challenger Gray and Christmas announced 172,000 layoffs for the month of February. Only 62,000 of them were from the public sector. So if we see companies continue to try and protect their margins preemptively, that's going to come manifest in the form of further job cuts.
How nimble is this stock market right now if we get better news in the days ahead? If some of the countries that have been targeted with reciprocal tariffs, as the president calls them, offer concessions, maybe some of this starts to come back, as Scott Bessent has suggested. We start high, then we start pulling things down as the concessions roll in. Is this a market that's flexible, nimble enough to respond?
Well, I certainly don't think in the immediate term that this market is going to be nimble. There was a lot of short covering going into this formal announcement that's just come out. And we're seeing now that there is, again, a worse than expected, a deeper than expected, and a wider than expected raft of tariffs that are going to be imposed. And for now, the markets remain very skittish. And I would venture to say we're going to see another interim term decline here in the stock market.
Well, we certainly are already seeing that if you take a look at the way ETFs that track the major indexes are trading in after hours. QQQ right now down the better part of 3 percentage points. Danielle, before we let you go, obviously this all puts the Federal Reserve in a tough position. We have seen difficulty dancing around the tariff question on the part of Fed Chair Jerome Powell. Do they have any choice here except to stand pat and wait to see what happens a little bit longer? And does that run the risk that whatever move they make next, it's going to be one that ends up being too late?
Well, Kaylee, since you mentioned that, 66% of Americans, actually 72% as of University of Michigan's final read, expect a rising unemployment rate. We've seen 5 straight months through the Conference Board of Americans anticipating a rising unemployment rate. So through the prisms of 2 very long established surveys, most Americans expect for there to be a rising unemployment rate. At some point, I think the Fed may have to take its eye off of the nebulous matter of tariffs and be attentive to its second mandate, its labor mandate.
Danielle DiMartino Booth, great to have you with us, CEO, Chief Strategist, QI Research. Just moments after we got the information from President Trump, we're keeping our eyes on the markets clearly here. Futures just opening in the United States, or will actually shortly here. We're going to bring in Romaine Bostick from World Headquarters in New York with more here on the market reaction. Romaine?
Yeah, we're in a little bit of a lull on futures. They basically closed now. They will reopen in just a bit. The only real active market right now is in the currency space as well as in the crypto space. But Joe, before we saw futures shut down, taking that break here, we did see some significant moves lower. And that was largely because once people got a look at the countries affected, the types of tariffs that were going to be imposed by the Trump administration, and the idea that there were no carve-outs, that's causing some concern. Even before we got those numbers, though, I want to draw your attention to something that Danielle DiMartino Booth actually pointed out, and that was RH. This is the luxury furniture maker. They actually came out with earnings. Now, these earnings were sort of in the bag before the Trump announcement, but they did address those tariffs, saying that basically the baseline tariffs, they're already prepared for. They could not make commentary about the reciprocal tariffs, but they did make it clear here that they are going to have to make some adjustments. They did say that this is a rougher business environment, and they missed estimates for the most recent quarter as well as their guidance. They talked about this idea that they are going to have to make changes to their manufacturing process, moving more of their manufacturing back to the U.S., particularly to its factories in North Carolina. But even once they do that, they're saying that only about 48% of their upholstered furniture would be made here in the U.S. And when you take all of their furniture combined, only about 14% of that will be sourced in the U.S., and that's for just this year alone. So this is a challenge that a lot of companies are facing. Those that have outsized exposure to overseas supply chains, it's going to take a long time for them to reshore or find some way to adapt. That includes names like Applied Materials, Analog Devices, Intl, KLA, Southern Copper, GE. I'm going through a whole list of companies that you can go through on the Bloomberg terminal that shows the outsized exposure that these companies have, not just to China, but really the broader world outside U.S. borders. And you have to ask yourself the question, what can those companies do in the short term to mitigate the impact of these tariffs, which, as you have pointed out, are going to start to take effect in just a matter of days?
That's right. Bloomberg's Romaine Bostick, thank you so much. And on that note, on Timeline, the White House has confirmed that the 10% baseline tariff rate will begin effective Saturday, April 5th. The additional reciprocal rate that has been put on top of that for big partners like China and the European Union will take effect on April 9th. So there is some lag here, Joe, that we weren't necessarily expecting, as the White House press secretary previously said the tariffs would be in effect immediately, though still, when it's just a matter of days, does not leave much time for companies to adjust.
That's true. We've heard a couple. It's important to make this note. The press secretary said immediately. Donald Trump, I think, said tomorrow.
Yeah.
It's going to be this weekend, the 5th, and then the 9th for reciprocal. So we'll keep tabs on that for you as they take effect.
Yep, and we'll keep the analysis going here on this extended edition of Balance of Power. Still ahead, we're going to assemble our political panel to give us the reaction to Trump's tariff announcement and what it means for him politically. Plus, we'll have an important interview live from the White House. The Secretary of the Treasury, Scott Bessent, will be joining us live here in the aftermath of this announcement. Again, what President Trump calls Liberation Day in America. At least we know now what the actual rates are, but we still have many remaining questions for those in his administration, Secretary Bessent included.
Sure. We'll be getting it straight from the source, straight from the White House, coming up next on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. Alongside Kayleigh Lines, I'm Joe Matthew. As we turn now to the White House and the North Lawn, joining Bloomberg's Annmarie Hordern is Treasury Secretary Scott Bessent. Annmarie.
Thank you, Joe, and good evening. Just coming off of that announcement from the president announcing a baseline tariff around the United States, as well as reciprocal tariffs on certain trading partners, I'm joined by Treasury Secretary Scott Bessent. Mr. Bessent, Mr. Secretary, thank you so much for joining Bloomberg TV. So we're going to have the baseline tariffs come into effect first, then there are reciprocal tariffs, a little bit more of a different rate for each individual trading partner. Are you preparing to negotiate with some of these trading partners before that tariff rate comes into effect on April 9th?
Well, I think there have been a lot of discussions, but I think we're just going to have to wait and see what would happen. What I would say, Annmarie, is I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number barring retaliation. So we've got a ceiling, and then we can see if there's a different floor.
So you sound like you're ready for negotiation with a number of these partners. Has the European Union, has China, has India, have these countries reached out?
Well, they've all reached out, but it's going to be up to President Trump to see what he wants to do. I think the mindset might be to let things settle for a while. Their tariffs or non-tariff barriers have been on a long time, so we'll see where it goes from here.
When it comes to China, they have a much higher rate on this list. On top of that, there's still that 20% fentanyl tariff rate. Is all of this coming together to be more than a 50% tariff rate for Beijing?
Well, yes, I think it is, and I think it's a combination of things. And, again, that I think China said today that solving the fentanyl crisis depends on taking off the fentanyl tariffs, and I'm pretty sure that's not the way the sequencing is going to work. They're exporting the precursor chemicals, and every day, every week, every month, Americans are dying, and it's going to have to stop.
When it comes to places like China, the president has mentioned he's willing to even look at things like TikTok to potentially do a negotiation with them when it comes to tariffs. I'm sure you're looking at things like the yuan. What's on the table when it comes to this trade realignment between Beijing and Washington?
Well, we haven't started anything yet. We've been busy with the tariffs. I've been busy, as we talked about earlier. The tax bill's going very well. So I think that we will move toward the bilateral relationship with China now that we've done the multilateral tariffs.
Plans for conversations or a trip to Beijing?
Nothing imminent.
When it comes to this negotiation, April 9th, these tariffs come in place. Do you plan on having negotiations before that date?
Again, I'm not part of the negotiations, so we'll see. I am sure that there are going to be a lot of calls. I just don't know if there are going to be negotiations.
The president had this huge chart showing all of the different rates. Canada and Mexico notably missing on that chart. Why is that?
I'm not sure.
Not sure. Okay, I imagine that has to do potentially because they're already in negotiations previously with the 25%. I'm not sure if you saw the initial market reaction.
I haven't.
So equity futures slid on the news. You had talked about how we're in a detox period. Do you feel that we're still in that period, or are you starting to get a little bit concerned?
Well, the detox period has nothing to do with the tariffs. The detox period is off this incredible level of government spending that we've had, and unsustainable amount of fiscal stimulus. And look, that's got to stop. That's got to stop. So, can we continue weaning ourselves off of that? And as we see private or public sector borrowing go down, private sector borrowing go up, public sector jobs come down, private sector jobs go up. Is it going to be perfectly symmetrical? No, but we did see an increase of 10,000 manufacturing jobs last month.
So it doesn't concern you today that during the tariff announcement, equity futures sold off when initially they were rallying when the president only announced the 10% tariff base, and then they fell when he announced the higher rates for things like the European Union and China?
Yeah, and Annmarie, I've learned not to look what goes on in after-hours markets.
Okay, but since the peaks in February, stocks are down 8%. I think the NASDAQ from its high most recently is down 12%. So far, though, this kind of market downdraft so far this year is not concerning you?
Well, look, in my old business, I was very concerned about market movements, and I'm trying to be Secretary of Treasury, not a market commentator. What I would point out is that especially the NASDAQ peaked on Deep Seek Day. So that's a Mag 7 problem, not a MAGA problem.
Okay, so let's talk about what else you've been spending a lot of your time doing. You have been up on Capitol Hill constantly. You are really working on trying to make sure that this administration can extend the Tax Cuts and Jobs Act. On top of that, more tax cuts. Right now, how are the conversations going in Congress?
Well, I actually think the most underreported story in Washington, not by Bloomberg, of course, is the incredible unity amongst Republicans, and I think it's President Trump's leadership, but Mike Johnson, with a very narrow margin, issued the reconciliation instructions, and then he also passed a clean continuing resolution. On the Senate side, they are very attentive, and I think they may have something done by this Saturday.
This Saturday. Okay, that's the start of it, though.
Yeah, that's the start.
You recently talked about how you think it's not just going to be tax on tips that gets added to this bill. You think reconciliation can include a plethora of what the president has talked about. No tax on tips, no tax on Social Security. Also recently talking about rebates if you buy an American car. How do you get all of this done?
The deductibility of interest if you buy an American car, which I'm older than you are, but when I bought my first car, the interest was deductible, but now it's got to be only on American cars.
So how do you do all this at the same time that market participants, budget hawks in Congress are concerned about the deficit? How are you going to have this big reconciliation package?
Well, I think, as we've seen, there's a lot of room to cut spending. So I think, again, where Republicans have incredible unity is on the spending cuts, as we're seeing.
So when it comes to the timeline of all of this, I do notice that now reconciliation, it seems to be an agreement between the House and the Senate that they're willing to consider about raising the debt ceiling. Mm-hmm. So do you plan on getting this bill done before the X date, which the CBO is saying could be the middle of the summer or September?
Well, Annmarie, I think you just answered the question for yourself, because if debt ceiling is solved via reconciliation, then it has to be done before we hit the X date. And we're going to go onto the warning track sometime in May or June.
So that's when you plan to get this tax bill done?
That's a goal.
So if we could put both these stories together today, the president comes out with tariffs, you're working on a tax plan. He talks about tariffs being revenue raisers to offset the tax bill you're working on. At the same time, you and the president also talk about a negotiation you're willing to do to get reciprocity when it comes to other trading partners. How can it be both revenue raising and a negotiation?
Well, to the extent that the tariffs are higher than what we had, it will raise revenues. And, as far as the negotiations, we'll see. And, I could tell you, though, it's not going to be possible to include the tariffs in the CBO scoring. So that will be something running in the background. And as the president said, we've taken in several $100 billion on the China tariffs, but those don't get scored.
Do you feel that you need to have enough revenue raised from these tariffs before this reconciliation package comes to play in Congress?
Well, I don't think we have to have the revenues raised. And look, we're doing two things. Tariffs are going to raise revenues, and then we're also stamping out waste, fraud, and abuse in the government and bringing down the expenses and spending. And we're not going to get credit for either of those with the CBO scoring. So when your audience, when American people see these CBO scores, there could be large, but there is a substantial amount of tariff income. There's a substantial amount of savings.
While all this is happening, consumer sentiment has definitely taken a bit of a dive. Expectations for inflation have gone up. Banks like Goldman are cutting their GDP forecast, saying potentially the Fed is going to have to cut rates, not the good kind of cuts, the kind of cuts because they're nervous about growth. How concerned are you that the timing of all this is going to be incredibly challenging because of how the American consumer, how corporate America is feeling at this moment?
Well, it tells me a couple of things. One, we got to get the tax bill done quickly, because that's a confidence builder. And two, we're seeing sentiment surveys from the American people, but we haven't actually seen them take action. If the households actually thought that there were going to be inflation, if their real inflation expectations had increased, what would they be doing? They'd be hoarding goods, and they would be demanding wage increases, and neither one of those has happened yet.
So at the moment, you're not concerned about some of the soft data we're seeing?
No, I see nothing. And one of the great things, many great things about being at Treasury is we have lots of business people come through, and everything we're seeing in the economy is still very solid.
And executives haven't voiced any of these concerns onto you?
No, there's some idiosyncratic things, but in terms of the expectations actually turning into hard data, none of them have seen it yet.
Now that you're working on the tax bill, and of course tariffs at the moment are out of the way, what else is on the agenda for you for the rest of the year?
Well, we have the Ukraine deal that's coming up. We've gone to maximum pressure on Iran, so a big part of Treasury is national security. And then we are doing a big push on deregulating in a smart, safe, and sound way the regulated financial institutions, which is going to allow for the private sector, not the government sector, to grow.
When it comes to international, where are you with Iran, Ukraine and the mineral deal?
I believe we may have a team from Ukraine coming over as soon as the end of this week or the beginning of next week. Ukrainians have, I believe that they've hired counsel. And what we did was after the incident in the White House on, I believe it was February 28th, we were going to sign a 4-page deal that was parameters of understanding. And at Treasury, we took the opportunity to move forward to the big deal. So this is the exact same deal that would have resulted from the 4-page signature deal. So we've just fast forwarded, and we didn't want to lose any time because we believe this deal is so important for the American people, for the Ukrainian people, and for the peace process.
So it sounds like in the next 2 weeks you're going to have this deal over the finish line.
It's ready on our side.
When it comes to Iran, since you mentioned that, and I know you're going to be focused a lot on international aspects, now the tariffs are done and you have the tax deals underway. When it comes to Iran, do you think we could see secondary tariffs, secondary sanctions?
Well, we've already seen sanctions for the first time. U.S. Treasury sanctioned a so-called teapot refinery, which is a private sector refinery in China, and they are the buyers of the Iranian oil, and we could see more of that.
Wow. Interesting. Treasury Secretary Scott Bessent, you've been very generous with your time today. We really appreciate it here at Bloomberg TV. Thank you so much.
Good to see you.
Good to see you. Joe Kaylee, of course, that was the Treasury Secretary Scott Bessent. The sense I got from him is when it comes to these tariffs, it is a ceiling, it is a cap. Says to me that this administration is willing to negotiate with trading partners.
All right, Bloomberg's Annmarie Hordern live at the White House with the Treasury Secretary Scott Bessent. Thank you so much. And of course, we did hear from President Trump the suggestion that if countries would like to see exemptions, they're going to have to lower their rates or terminate their tariffs, to use the word of the president. We'll have much more on this shortly and get some political analysis from our panel this evening. Still ahead here on Balance of Power on Bloomberg TV and radio.
Moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. Reciprocal, that means they do it to us and we do it to them. Very simple, can't get any simpler than that. This is one of the most important days, in my opinion, in American history.
President Trump speaking from the Rose Garden at the White House earlier this afternoon, announcing his long-awaited reciprocal tariff regime, which includes a 10% base rate on tariffs or on imports from all U.S. trading partners, and then additional reciprocal tariffs for those countries that the White House is dubbing the quote-unquote worst offenders in terms of their policies, both tariff and non-tariff barriers against the United States. We want to get some political analysis now here on an extended edition of Balance of Power on Bloomberg TV and radio, and turn to Roger Fisk, former aide to President Obama and Democratic strategist, alongside Republican strategist and partner at S3 Group, Ashley Davis, who are here with us in our Washington, D.C. studio. Welcome to you both. Coming into this afternoon, Ashley, we had an understanding that the president was kind of presented with option A or option B, blanket tariffs on everyone or tailored tariffs on a few. It seems he went with option C, which is I choose both of those things. Are you surprised by this?
I'm actually really not that surprised. What I'm most surprised at is that, in a good way, is that Canada and Mexico have kind of been exempted right now in regards to like everything else that was talked about before this. However, the 10% is something that I think that he couldn't have backed off on. There's obviously the dirty 15, the countries that has been talked about that have trade barriers that are much higher. What I'm watching is this 10% tariff goes in, and then what happens on April 9th, and do those really strict tariffs come in then? Or are all these negotiations happening in the next 10 days to make sure they don't?
What's your thought on that, Roger? Because a lot of people believe still that this is a negotiation and we're not going to be raising revenue through tariffs for the long term.
Absolutely. Thank you so much for having me, and thank you for having me here with Ashley. To Kaylee's option C point, it's the perfect entree to let's make a deal, right? I mean, it leaves it relatively wide open, relatively vague. And as we've touched on before, a good call with Sheinbaum. Mexico goes back into the good column, on and on and on. A positive visit from a head of state from a European country, and then that goes on the back burner. To Ashley's point, I do agree. The performative nature of how he's talked about tariffs has been so ricocheting around for weeks that it really is best to just see what's actually going to get implemented. The flat on the 5th, the selective ones on the 9th. Obviously, there's many different ways that can get massaged between now and then. But I'm to the point with the announcements and all that other stuff is kind of a wait and see and deal with it when it actually gets implemented, because up until then, there's just a lot of performative elements to this that it's tough to say exactly where this is actually going to end up in, say, 10 days.
Which hurts the markets, right? Because the uncertainty. So does today make it any better? I don't know in regards to the markets up and down, because you have the 10%. I would almost rather say, let's do the 10%. And then let's get away with the 9th, what happens on the 9th, because then it's at least certainty. Right. And I do think, I'm a conservative in regards to fiscal policy, and I think that we have to have some sort, and he's ran on this for the last 4 years, really, is that he needs to make sure that the other countries are paying what they deserve.
Yeah, and the dollar lost half a percentage point during his remarks.
But will it stay?
Well, I think that's the question we all have. And to Roger's point, Ashley, on this being about the art of a deal, is he taking a political risk here, assuming that he will be able to make the deals he wants? Because if that is his exit ramp, getting countries to lower their tariffs, what happens if they don't, and then American consumers are facing higher prices and he's kind of out of maneuvering?
Well, and I think it's different country by country, like how many countries need us and how many don't. Like, does China need us? Does Taiwan need us? Like, what are these other areas that, it's really up to country by country of who needs us. Obviously, we don't want to have trade wars with Canada. We don't want to have trade wars with Mexico. We don't want to have trade wars with certain countries in the EU. However, he has to have some stance to try to say what he's been saying the last 4 years is let's make it reciprocal in some way without crushing the economy. But to your point, yeah, he owns us. That's why Secretary Bessent was up today with the Senate Republicans, not just talking about, by the way, we're not even talking about the fact that there's a budget reconciliation resolution that was announced, because that was like secondary right now. But that's why Bessent was up there today talking about how this is going to impact, Chuck Grassley's state in Iowa.
You have both helped to prepare presidents for major events. This was billed as something on the level of a State of the Union, Liberation Day. The optics were in place. President showed up straight off the script pretty quickly. He had the crowd packed with a couple of guys in hard hats of some sort of MAGA faithful there. But what did you think of this whole presentation today at the White House? As we were told, the world was watching, Roger.
Which is, I'm sure, true. In many ways, it's the crystallization of the strengths and the weaknesses of the individual, the president, which is the excellence, I have to say, in the optics and the capturing of the viewership and getting the attention and the eyeballs and the clicks. The flip side of it is, the creeper from the Secretary of the Treasury is that he actually said the economy is still solid, which contradicts everything that the president has said about the American economy for the last year and a half, right? The idea that the Secretary of the Treasury would come out. And my point in that is that I think you could count on one hand the number of people that actually knew what he was going to say when he went out there and presented a lot of this. And that's why you end up with kind of a fracturing messaging from members of the cabinet, because the Secretary of the Treasury just went in front of a mic and said the American economy is still solid and sound, contradicting 18 months of messaging from the president, while the president's going out and saying something that was probably quite insulated in terms of socializing it through the government. Because what you would normally see would be half the cabinet in important swing states or, economic hubs, Research Triangle, the Port of Savannah, et cetera, doing events right now on into tomorrow. But he's a party of one in so many ways.
Well, and when we consider the feeling about the economy, even if the data would suggest it's still solid, that doesn't mean that the vibes are necessarily as solid as we're seeing polling, Ashley, that indicates voters are actually not giving the president great marks on the economy, and tariffs by and large aren't popular. With that kind of data in mind, does that suggest that the president is making the right moves here?
Well, what I think, which will be interesting, is I do think that most of his voters or most of the people in America that voted for him will say he's fighting. He's doing exactly what he said. He's putting tariffs on people that are cheating us. Now, if that impacts how much their batteries are, how much their, X, Y, and Z daily life is, that's what's going to be the problem. But right now, I think that, the 50+% of the country that voted for him is happy that he's fighting these countries that are not doing things good to us.
That could take some time based on what we're hearing with the front loading that we saw ahead of this announcement. If it's 6 months before people see a meaningful increase in prices, will they tie it to this? We could be in a very different political world.
Very possibly. There's nothing that drives home political reality more than the kitchen table. There's an element of this, as I always sometimes touch on, of what's not happening, which would be if he were to go out and talk about the renaissance in American manufacturing, and that's why I have this program about teaching every kid how to code. Or that's why I'm putting all this hundreds of millions of dollars into community colleges so that they can incorporate an AI curriculum into community colleges. That's how you really prepare an American economy for the 21st century. This is steeped in a nostalgia, and its true north is pointing backward rather than forward. And to me, the lack of preparedness to get the American people the skills and the education to actually take on the jobs of the future tells me that this brings me to my original point, which is that this is much more performative in nature than it is about a renaissance in American manufacturing.
We're going to have a lot more to talk about in an extended edition of Balance of Power here on Bloomberg TV and radio with the help of Roger Fisk and Ashley Davis. Thank you so much for the insights. Our special extended edition will continue, Kaylee, in our next hour with some important voices, including Republican Congressman Roger Williams of Texas.
Yeah, an owner of car dealerships, which obviously are wrapped up in this tariff story. We'll also talk to Andra Gillespie of Emory University and Harry Broadman, who worked in the George H.W. Bush administration. That's all ahead here on Bloomberg TV and radio.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons on this extended edition.
President Trump announcing 10% blanket tariffs on U.S. trading partners and additional reciprocal tariffs on some countries. Speaking today from the White House Rose Garden.
In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world.
Markets reacting to the announcement with U.S. stock futures just opening sharply lower. We'll have analysis on the economic impact of these new levies from Harry Broadman, former chief of staff for the White House Council of Economic Advisors for the George H.W. Bush administration.
We'll also be joined by former deputy U.S. trade representative in the Biden administration, Sarah Bianchi, and we'll have reaction live from Capitol Hill with Republican Congressman Roger Williams of Texas. Thanks for staying with us. An hour two now on Balance of Power on Bloomberg TV and radio. As Kaylee just mentioned, futures just opening here in the United States following the president's announcement on tariffs. For more, we turn immediately to Bloomberg's Romaine Bostick at World Headquarters in New York. Here we go, Romaine.
They open lower in a big way. S&P futures in New York down more than 3% right now. Dow futures down about 2%. Oil futures right now down about 2% as well. To put this in context, Joe, the last time we saw the S&P have a drop of 3% or more, you have to go all the way back to August of last year. And that was when you had a 3-day global sell-off that was largely based around the idea that the U.S. might be headed towards a recession. Now, of course, we avoided that recession and the market bounced back. We should also point out that futures trading does not always translate into the cash session trading that starts at 9:30 a.m. New York time. But it usually is an indicator of where sentiment is at. Volume is relatively light here in the overnight session. But when you start to look at some of the ETFs that are trading, some of the other index futures that are trading as well, on a sector-by-sector basis, it is awful. Russell, the main ETF that tracks the Russell 2000, right now down 5%. ETF, that tracks the technology sector, down 4%. Pharmaceuticals down 4.5%. I could go on and on, but it's basically red across the screen for pretty much all of the major indices, all of the major ETFs right now that we can actually track in real time. The only major bright spot out there right now, you'll find that in GLD equity. That's gold. That's getting a rally right now, up more than 1% here in the after hours trade.
All right, Bloomberg's Romaine Bostick, thank you so much. Incredible to see a more than 4% decline on NASDAQ 100 futures. And I do wonder what that bodes for the open in Asia as well. That is where we go next, live to Hong Kong, where Bloomberg's Stephen Engle is joining us from. Steve, we were just told on this program by the Treasury Secretary Scott Bessent that it's his belief that the effective tariff rate on China is now 54%, 34% reciprocal on top of the 20% for fentanyl. What response are we likely to see from that?
Well, we haven't gotten an official response from Beijing yet. I wouldn't expect it until the business day begins in a few hours at 6 a.m. now in Beijing. We did have some state media commentary yesterday, perhaps in a last-ditch effort to try and mitigate some of the potential tariff action. But it turns out, obviously, it fell on some deaf ears because the Trump administration levying that additional 34%, that is more severe than Bloomberg Economics a couple of days ago pointed out as a possible possible worst case scenario of additional 20%. So if you look at also the key Asian economies that are so critical to the global supply chain, Vietnam, which has a 46% additional tariff. China, as you mentioned, 34%. South Korea, 25%. Japan, 24%. Taiwan, 32%. So key Asian markets are going to have those additional reciprocal tariffs starting on April 9th, on top of course, that baseline 10%. So Asian markets going to start trading in earnest with Japan in a couple of hours. We probably should start looking at Australian futures and Australia Open as well. It probably is not going to be a very pretty day on the Asian markets. But key to this, obviously, is, as Scott Bessent talked about, fentanyl. Fentanyl issue separate from the trade issues and the non-tariff barriers and the VAT tax rebates that the Chinese government allegedly gives its exporters separate. So there is room perhaps for some mitigation by the Chinese. But so far, from my experience the last 10 days on the mainland, hearing from Premier Li Qiang and others, it doesn't seem like the Chinese are ready to negotiate because there's no high-level discussion yet at this point between Donald Trump and Xi Jinping. It's a low-level, stalled negotiations and talks between the two countries. China prepared and is probably bracing its domestic economy for that initial 20%, an additional 34%. I think you can guarantee that there will be some reciprocal moves that have been baked in and ready to be implemented as soon as the business day begins here today.
Bloomberg Stephen Engle. Stephen, fascinating. Thank you for great reporting as we now turn to our immediate neighbors and trading partners, beginning with Canada. Joining us live from Toronto, Bloomberg's Derek Decloet. Derek, thanks for being back with us this evening. Is the headline in Canada dodged a bullet, or are you waiting for something worse?
I think so. I think it's a mixture of relief and maybe a little bit of confusion about how all of this will apply. But overall, and you saw this in the trading activity in the Canadian dollar, overall a bit of a sense of relief that Canada and Mexico as well have been at least partially exempted or given something of a reprieve here from additional tariffs. Now, what's tempering that sense of relief, of course, is that automotive tariffs, the president was very clear, are coming on tomorrow at a 25% rate. And although it's not perfectly clear yet how that's going to apply within the USMCA zone, it does seem obvious that, and that's a major export category for both Canada and Mexico. And of course, the steel and aluminum tariffs, which have been in place for a number of weeks now, also at 25%. Those are big categories of products for Canadian exporters. So by no means does anybody think that this is over. But for the moment, yes, there is a little bit of a sense of that this is a partial reprieve, at least for now.
All right, Bloomberg's Derek Decloet, thank you so much for joining us. He mentioned that what is applicable to Canada is also applicable to Mexico. And joining us live here in Washington is our Mexico Bureau Chief, Carolina Millan. So, Carolina, is this actually vindication for Mexican President Claudia Sheinbaum, who took a wait-and-see approach, really wasn't talking up a big game in terms of retaliation, and perhaps it looks now like she's not going to have anything to retaliate for?
That's right. As you might recall, in the weeks leading up to this big announcement, Mexico's President Claudia Sheinbaum had been talking about keeping the cool-headed approach, waiting to see the fine print, and waiting to see what those retaliatory tariffs look like. And it looks like her approach was on the right vein, in that Mexico, as well as Canada, seemed like some of the big winners. Of course, still waiting for some of the fine print, but I would imagine that tomorrow, when the president holds her daily morning press conference, she will be quite optimistic.
So do you feel that there's more coming here, or is it onto a renegotiation of the USMCA?
I think that's the question that everybody has on their minds now, right? Because all this tariff discussion was putting into question whether the USMCA agreement is still relevant, what that will look like. We know we're up for review in 2026. Whether the countries will want to turn that into a wider renegotiation is still to be determined. But it seems that this agreement is actually showing that some of those basic principles between North America are still standing. So more to come on that.
Bloomberg's Mexico Bureau Chief, again with us in the nation's capital, Carolina Millan. Thank you so much for the insights. Coming up, we look to Capitol Hill for reaction. How congressional lawmakers are reacting to President Trump's monumental tariff announcement today from a Republican, Congressman Roger Williams of Texas, who chairs the House Small Business Committee, will bring his view. Next on Balance of Power on Bloomberg TV and radio. Welcome back to the extended edition this evening of Balance of Power on Bloomberg TV and radio. Alongside Kaylee Lyons, I'm Joe Matthew, as we watch quite the market reaction to President Trump's announcement on tariffs. Of course, the 10% baseline and the reciprocal tariffs that he also detailed, pulling the S&P futures down 3.5%, NASDAQ 100 futures down over 4%, almost 4.5% now, and a decline in oil prices as well. Crude oil futures, WTI futures, down about 2.5% to just about $70 a barrel. Even crypto is heading lower. Bitcoin now down $1,838, holding above $83,000. And we're going to keep tabs on the markets here as we, of course, transition to Asian trading as well. But an important opportunity to speak with a Republican member of Congress on the heels of this announcement. Congressman Roger Williams of Texas, who chairs the House Small Business Committee, joins us right now live from Capitol Hill. And Congressman, it's great to have you on Bloomberg TV and radio. You own car dealerships, and you have a unique insight to the fallout from what we just heard from the president. I'd like to start with your perch, though, on the Small Business Committee and whether this helps small businesses at least understand what's coming, because many are worried that we're headed for an inflationary environment or worse, a stagflationary environment. What does this mean for small business owners?
Well, we'll have to see. I mean, there's a lot of things being said right now. And basically, I can tell you, being a small business owner myself, you know, tariffs are talked about, cost of goods sold are talked about, but also what small business and Main Street want those tax cuts and cutting regulations. I mean, we've got to get that done and also come by the end of April. But I think that Main Street would begin to know the rules. I think the program the president put out today was very well thought of, and everybody agrees we've got to fix this imbalance of trade. There's no reason America should be in a deficit trading position with any country in the world. We need to be the makers of, not the buyers of, and this is going to get us in that position. Now, I will tell you, being a retail person in the car business, we could see a raise in cost of goods sold, but at the same time, when that happens to people, the car dealerships and the retail part of this business, what you do is you adjust. If you've had something on the shelf or the lot too long because it's higher priced, you reduce the price, and then you sell it and get something that you can sell at a margin. I can tell you too that in my business, used car market's going to go up now. So people, their used car is going to be higher. They're going to get a tax discount here in the next several weeks, and they're going to get a discount from the dealer. So I've told people it's actually feasible that you could buy a car with a tariff on it cheaper than you could before it had a tariff on it.
But I wonder, Congressman, what that actually means for the margins for these businesses, because if the end goal of the tariffs is in part to encourage more manufacturing in the U.S., if you are making those long-term capital investments, don't you need a little bit of a cushion to be able to do that? How are businesses supposed to be able to do both things at the same time?
Well, you got to be able to sell and you got to be able to grow. I mean, that's what being in business is all about. But I think what you're going to see, and I think the president put it pretty clear, that if you're going to build in America, you're going to get discounts. You could even not pay any tax if you bring your businesses here. And that's why we see auto manufacturers not going overseas now. They're already committing to expand in plants that they might have had, or older plants, or build in America. I mean, that's what it's going to be about. That's going to drive prices down. You're going to have more people working in the plants. You're going to have more jobs. You're going to have more customers. So I think Main Street over the short haul is going to benefit from it. There could be a shock in cost of goods sold, but we as retailers take care of that by removing the higher price unit and selling the fresh one that we get. That's what it's all about in controlling inventories.
Well, the shock on Wall Street has been real, Congressman. I wonder what you make of these numbers. You probably heard me mentioning them coming into our conversation. We already went into correction territory. We're looking at a more than 4% decline in S&P futures, the broad market right now. The Russell 2000, of course, tracking small businesses, close to your heart here. If these declines hold tomorrow morning, through the night into tomorrow morning, it will be in bear market territory. Is the market just wrong?
Well, I'm not saying the market's wrong, but I'm not surprised. Are you? I mean, this was something that people have been waiting. There have been all kinds of, what is he going to say this? Is he going to do that? So I think the markets are adjusting accordingly, but I think they'll come back because, and fairly soon, because it's natural to for these markets to come down based on what we've talked about. But I think we'll see Main Street come back. Main Street will carry more inventory. Main Street will sell. The economy is going to be good. I'm going to tell you, we're going to have a good year this year. And when you talk about interest rates and you get deep into that, people are going to have the ability to buy something at a fair price. I'm going to have a chance to sell something at a fair price. And that's called capitalism, entrepreneurship. And it's going to create competition again. A lot of businesses haven't been able to compete against each other. They've been fighting government regulations. So I think over the long pull, meaning, I don't know, next quarter and a half, you'll begin to see all that come back.
Well, so is that what you're telling your constituents, Mr. Chairman? Because we continually are seeing polling that suggests that Americans are not totally satisfied with President Trump's handling of the economy so far, that tariffs are not overwhelmingly popular. What is the American electorate getting wrong on that front? Are their feelings on that not valid?
Well, I'm not saying their feelings are not right or what they're getting wrong. They're concerned. I mean, a lot of people are concerned. You can't read anything. Up until tonight, there's nothing good being said about tariffs. There's nothing good about being said about a lot of things that are happening in the economy. The people hear that. But I'm telling you, Main Street is resilient. Main Street will come back. Main Street will get going. Main Street's excited. People I talk to, and I've been in the car dealership business 52 years. I've been through a lot of things. And we're a resilient group, and they're going to read some negatives, but at the same time, they still got to go to work. They still got to open up. They still got to sell that product they got on the ground, and they will do it. And the consumer will benefit from it because they'll be back competing again in free market and capitalism be working.
Is the SBA, the Small Business Administration, prepared to help small businesses who are going through this, whether it's a car dealership or otherwise? Yeah. Congressman, we've been telling stories about this massive run-up, the front-loading ahead of the tariffs. It's been a riot on car dealer lots. That could be a really different story in the second half of the year.
Well, are you talking about people buying cars because they're afraid of the price increase?
That's what we've been talking about, yeah. Pretty remarkable increases.
Well, we've had some increases, but it was nothing like COVID, for example. But look, that's good. If we can sell a car today and sell a car tomorrow and the next day, that's all good. So that's positive. I'm telling you, the consumer will wake up one day very soon and say, hey, things are okay. The bottom didn't fall out. I still have my job. I have a tax deduction. I don't have as many regulations on my business, and everything's is going to get back to normal and be better than normal. But I'm not surprised we have the markets doing this and that, and consumers being worried, and small business owners being concerned. I mean, I'm concerned, but I'm telling you, it's going to come back. I've seen a lot worse than this before in 52 years of being in business.
And finally, Congressman, on the subject of taxes, the Senate, of course, released its own budget reconciliation blueprint today, more in line with what you and your colleagues in the House had passed, though there are still some gaps that need to be bridged here. Are you confident that this really can get done by Memorial Day, as the Speaker has suggested?
Well, it has to be. It has to. I mean, we ran on this. President Trump got 75 million voters that want to say, I want tax cuts, I want less regulations. We need to do it. We passed a bill out of the House. The Senate, quite frankly, I'll just pass that one. President Trump has told him to do it, and let's just get on with it. So every day that goes by, it's one day less that we can begin to promote this agenda that will fall in line with what we've talked about, giving confidence to Main Street America.
All right, Republican Congressman Roger Williams of Texas, the chair of the House Small Business Committee. Thank you so much for joining us. We want to get another take now on the economic impact these tariffs ultimately will have, and turn to Harry Broadman, former chief of staff for the White House Council of Economic Advisors during the George H.W. Bush administration. Harry, thank you so much for being here. Obviously, what we're dealing with is a blanket 10% rate on all trading partners, even higher rates on those that the White House is dubbing the worst offenders. In terms of worst case scenarios for those worst offenders, is this as bad as it could have been? And what do you anticipate will happen in the economy as a result?
I honestly believe that we will rue the day of this announcement. This is really unchallenged territory, and I do think that Mr. Trump has made a drastic mistake in choking off economic growth. The markets are one thing. What really matters is what is going to happen at the real economy. And, you know, there's a lot of misinformation about actually who pays tariffs. The people who pay tariffs are the consumers. Mr. Trump continues to believe that it's the exporting nation that pays the tariffs. So I wish the congressman were correct about, his car business, and we'll get over this, but I think it's going to be a very, very bumpy road, and we may well look back on this as sort of a knife edge of the economic prosperity of the United States for some time to come, and economic leadership of the U.S. and the global economy.
Well, you sound like an old line Republican, Harry Broadman. I wonder what you think of the current state of the Republican Party finding religion on tariffs. Will that religion go away if this experiment does not work out?
It's really, having worked on Capitol Hill and the White House and a trade negotiator, it's astounding where people's positions have flip-flopped. This is not sustainable. And I think, how we navigate this as a country, I think, is extraordinarily challenging. But I think this policy will prove to be extraordinarily divisive in this country, far more than anyone appreciates. And I think, as I said, even more divisive for the leadership of the United States, in the world economy. After all, recently, Mr. Trump announced that he wants to cut off funding for the WTO. I understand a lot of people have misgivings about the WTO. I was one of the lead negotiators creating it. But I think, if we don't have the United States being the champion of open markets, I don't know who is.
Well, I want to ask you, as we consider the kind of responses here, about the notion that at least some parts of labor seem to like what they're getting out of the White House when it comes to these protectionist policies. The UAW on auto tariffs specifically said that this is necessary to end the, quote, free trade disaster. Are there elements of this that will be good for the American worker?
Perhaps, but don't forget, workers are also consumers. But on the working side, the notion that foreign automobile manufacturers or other companies are going to come into the United States and not bring with them advanced technologies that are going to be labor saving, that is, that reduce the amount of labor needed to make a particular product or deliver a particular service, is utterly naive. Secondly, these tariffs will engender greater inflation, again, because it's the consumer who pays them. So you've got technological threats to workers, and you've got higher inflation. I don't understand how one can compute that this is a big win for workers and consumers. It just does not compute that way.
We heard from Senator John Kennedy, Republican from Louisiana, who's talking on Capitol Hill about this short-term gain, long-term gain idea, short-term pain, I should say. He said, quote, in the long run, it'll probably work, talking about the tariffs. The problem is, in the long run, we're all dead. So what happens, Harry, in the short run?
Well, let's hope we're not dead too soon. But I think the problem is getting from A to B is extraordinarily treacherous territory. And I understand, and I'm sympathetic with the notion that you make investments that are costly because you see the ROI, the rate of return on investment in the future. The problem is that Mr. Trump has not enunciated or articulated a transformation plan. He is building everything on tariffs. Where is the money going to be spent? Who is going to be spending it? Who's going to be hiring the workers? If he would have just announced a blueprint, said, rather than all these charts, like, here's my plan. I got a 10-point plan to rejuvenate the United States economy. We've not been treated fairly, perhaps in certain trade deals. We may have not had the best relationships with trading partners, but here's my plan. He doesn't do that. What he talks about simply is an instrument of tariffs without any analytical framework explaining how tariffs fit in to advanced technology, to workers, to consumers, and the like. There's no blueprint.
Well, the president has also suggested and touted investments that companies are making in manufacturing capacity in the United States, and has said that tariffs will mean more of that is coming. Obviously, those are longer-term capital investments, to the point that Joe was just making about the time horizon here. Will he even still be president by the time, if all of that does come to pass, those investments at least announced, for them to be fully realized?
Well, I want to say I hope he's doesn't go for a third term, because maybe he may be around then. But this is going to take a long time. The incentives, where there are incentives for tariffs to engender greater investment, are not going to happen overnight. And secondly, as I noted, the workers in this country are going to find themselves, when new investors come in, they're going to bring with them the latest technology, right? Those are labor-saving technologies. Those are not technologies that have more workers. They have less workers. And so this will happen, but it's not going to happen in the next 5 years. It's going to take a long time. And as I said, there's no roadmap articulated by the White House as to how we're going to get from A to B to C. It's all riding on tariffs, thinking that you wave a wand and this is going to happen.
It's great to have you with us and your instant reaction. Harry Broadman, former chief of staff for the White House Council of Economic Advisors in the George H.W. Bush administration. We thank you as we now get a better sense of where President Trump is going here, remembering that, of course, and remindingly, the reciprocal tariffs will not take effect until April 9th, and a lot could happen between now and then. With S&P futures now down more than 3.5%, we'll have much more coming up on this special extended edition of Balance of Power. Alongside Kaylee Lyons in Washington, I'm Joe Matthew. This is Bloomberg TV and Radio.
This is a special extended edition of Balance of Power on Bloomberg TV and Radio. I'm Kaylee Lyons alongside Joe Matthew in Washington, where President Trump just made his big reciprocal tariff announcement. And 30 minutes into futures trading, it doesn't seem that equity markets are too fond of what he has decided on. Bloomberg's Romaine Bostick is in New York with a check on that for us, Romaine.
Yeah, the three-day rally that we had in the S&P, a 1.6% gain through the closing bell on Wednesday. All of those gains being erased here in the post-market trade. You're looking at futures on your screen right now with an S&P 500 futures now down about 3.5%. The Russell right now down almost 5%. And the Russell 2000, of course, tracking small cap stocks. And if the lowest of the low levels that we've seen in the post market carry over into the start of official trading at 9:30 a.m. New York time, we're talking about a Russell 2000 that will be in bear market territory, down 20% from its highs for the first time in more than a year and a half. The S&P 500, it will be back in correction territory. You're going to see similar moves lower into either bear market or correction territory for most of the major indices. When you go on a sector-by-sector basis, almost no one is spared right now, Kaylee. An ETF that's tracking financials, the XLF, that's down 3% in the after-hours trade. An ETF tracking biotechs, down 4%. One tracking home builders, down 5%. And an ETF tracking Chinese tech stocks, the K-Web, that's round right now, down by about 7%. I do want to point out Stuart Kaiser, who heads equity trading strategy over at Citi. He's already out with a note saying that the market really was surprised by the fact that there were not any real exemptions, and more importantly, that there did appear to be meaningful follow through by the Trump administration on implementing these tariffs. And in his words, at least for right now, he would not be a buyer of the dip.
Really fortunate to have Bloomberg's Romaine Bostick with us live tonight from World Headquarters in New York as we now add the voice of Lizanne Sonders, Chief Investment Strategist at Charles Schwab. Lizanne, thanks for jumping on the line here. Having heard from President Trump, I wonder your thoughts on what you just heard from Romaine. Is this reaction justified, and will it look like this at 9:30 tomorrow morning?
Yeah, I think at this point it's justified because there are still a lot of open-ended questions. In fact, the one that has been floated around for the most part that I've seen that I don't know that we've gotten a definitive answer to relates to U.S. imports from China. So the imposition of a 34% tariff rate, the question is that on top of the 20% tariff that has already been imposed, mostly over fentanyl shipments. So if you combine those two, you're talking about 54%. And then, of course, what's been happening since the 2018 trade war is a lot of goods have been routed from places like China, be it to Vietnam or even to Mexico. And then you're looking at a 46% tariff rate on Vietnam. So, you know, we could go on and on and on. But I think what we're likely to see fairly soon is maybe a re-rating of the probabilities of recession. We had already seen that happen in the last couple of weeks. And it would not surprise me at all if we saw those notched up.
Well, we should note, Lizanne, that White House officials had told Bloomberg the 34% rate on China was indeed on top of the 20% tariff rate that had been implemented in order to combat fentanyl. And the Treasury Secretary, Scott Bessent, told our colleague Annmarie Hordern that it was his belief that those would be stacked on top of each other. To your point, though, around recession risk here, there's the question around the actual U.S. economy and whether it falls into a recession. But how easily could we also see an earnings recession if companies are not able to successfully pass on the higher input costs they're likely to face because of this?
Oh, I think at the very least, we're going to see continued downward pressure on 2025 estimates. We're already in week 15 in terms of consecutive weeks where earnings estimates have been coming down. And given that just a few months ago when we had expectations of about 14 or 15% earnings growth in 2025, that was predicated on record-breaking profit margins. There's no way we're going to maintain record-breaking profit margins. I think the timing is good. I'd put that in air quotes for earnings season starting in a week or so, because we'll start to get a sense and guidance from companies across the spectrum of industries impacted directly or indirectly as to how they plan to manage these increased tariffs, passing it on to consumers, eating it in their profit margins. And then, of course, we don't have any real news yet on retaliation. So I think this ups the risk of something economically damaging more globally, and that, of course, has tentacles back into the economy. But I think where consensus is right now of 10% earnings growth, all else equal, and given what we know now, that is too lofty an assumption. So I think the path of least resistance for earnings is significantly down from here.
So it doesn't sound like this was the clearing event, the clearing market event you were hoping for, Lizanne. Is there anything you'd be buying right now?
So what we have been suggesting to investors in this backdrop is to be more factor-focused than trying to navigate around sector leadership, which has been all over the map. And I think from a factor perspective, what has been a little bit of a sort of an anchor in this difficult time are factors like stocks with factors like stability and profit margins, obviously a little bit more domestic exposure, but also lower volatility, stability and dividend yield. So really staying in that high quality, but with an emphasis on stability. We've also been big proponents of diversification outside the U.S., international. And I think a year like this, at least so far, is a reminder that international equity diversification pays rewards. And it can sometimes happen really, really quickly in the face of what had been a lot of skepticism about why would I have any money anywhere else other than the United States. So I think that's the way to navigate within a very difficult equity market.
Difficult indeed right now. Lizanne Sonders, Chief Investment Strategist at Charles Schwab, thank you so much for joining us as we're still looking at a greater than 4% decline on NASDAQ 100 futures. Certainly the market's not liking what they're hearing. The question is, does the American electorate? And that's where we want to go next. The political impact of President Trump's tariff announcement. Joining us on that is Andra Gillespie, Associate Professor of Political Science at Emory University. Andra, welcome back to Balance of Power. When we consider the polling we have seen that suggests tariffs are not overwhelmingly popular with the American voter, that many of them feel that President Trump is not performing as well on the economy as he is on other issues like the border, what fuel does that potentially add to that discontent fire when you also might look at your retirement or whatever portfolio you have and see that number going down?
I would expect that this is actually probably going to have some downward pressure on President Trump's approval ratings with respect to the economy. They've been underwater for most of the polls that have been taken since he started his office or a second term of office. And so I wouldn't expect for those to change. Now, President Trump has actually tried to turn the tide. He's been attempting to inoculate the public, saying brace for some tough times, brace for some instability in the economy now. And so what he's hoping is that he can maintain his base by telling them that it's going to be bad at first, but in the long term, it's going to be better. And so I think the big question is, will his supporters stick with him in the long term? And will they be willing to ride out this tough period? And I think the bigger question than that is actually how long will this rough period be? And will people have the patience to be able to get through it?
Well, if this market reaction continues and prices rise, do Democrats just win the midterms?
It certainly helps them, but they're going to have a good message. They're going to have quality candidates, and they're going to have an effective mobilization strategy. So those were deficits during the 2024 cycle. It was very difficult. Vice President Kamala Harris put forward a laudable effort to put something together in a really short period of time, but there were deficits there, and I think Democrats are still trying to figure out what that message is. But terrible economic data certainly doesn't help the incumbent party.
Well, so when we consider the incumbent party and Republicans who would want to try to hold on to the majorities in both chambers in 2026, how could they need to distance themselves from these policies of the administration? Because by and large, Andra, we're not seeing many breaks within the Republican Party suggesting they don't agree with this use of tariffs.
Well, I mean, I think what would remain to be seen is whether or not Republican legislators would, in that instance, put the interests of their constituents or even their own self-interest ahead of their political interests. So there are a lot of Republicans who sometimes quietly speak out against some of the policies of President Trump and his administration, both in the first and in the current administration. But if they're concerned about a primary challenge, or if they're concerned that Donald Trump might attempt to badmouth them or endorse their opponent, that they won't speak up in an election. If President Trump proves to be unpopular, what we may start to see is some Republicans become emboldened in terms of how they speak out against the president. But what we've seen time and time again is that even when we've seen bursts of people kind of dissenting openly, usually they kind of come back in line shortly thereafter.
How much time does President Trump have then? Professor, you know, the reciprocal tariffs don't go into effect until April 9th. Presumably, some of those may not take effect if the White House starts to cut new trade deals and start to find reciprocity in our trade agreements with those countries. Let's say the markets like the sound of that. We get back to a better place as we walk into the summer period. Then reconciliation happens. We start dealing with Trump tax cuts. Could this turn around politically?
I mean, I think it is possible for it to turn around. I think you outlined two different scenarios here. So the first scenario is how long will people put up with, I guess, the instability that could be caused by tariffs, at least in the short term and possibly even into the medium term. And the short answer to that question is that I don't know. And I think we just have to wait and see how patient people are. I think the other issue is the spin. So we have seen President Trump, announce tariffs and then sometimes pull them back. And so that's certainly sort of wreaks its own instability on markets as people aren't quite sure what to expect. But what it also does is it creates an environment where it's actually really hard to keep up with what he's doing. And so in some instances, Trump may not be doing anything, but it looks like he's doing something, and he might be getting credit for at least trying to change the status quo. And so I think the question is, what are the underlying reasons for people choosing to stick with Trump or choosing to oppose Trump, and whether or not they're actually able to keep up with just the flurry of announcements that are coming out related to the economy from the Trump administration.
Well, and it's really mostly coming from the president himself, Andra. Does anyone else, if the tariff scenario doesn't work out in the way he's hoping it will, with just a revival in manufacturing, not too much in terms of increased costs for American consumers, barring that, is anyone else ultimately going to be blamed for these policies when he has been so vocal in his advocacy for them?
Well, I mean, so this is the one policy that Donald Trump has been consistent on for most of his adult life. So this isn't just a policy tenet of Donald Trump, the politician that we've known for the last 10 years. This is something that he's been advocating for since the 1980s, at least. And so one of the things that we think about in terms of kind of policy feedback is how effective is a particular policy. So President Trump is actually taking a big gamble by going against conventional wisdom and using protectionist policies to try to grow the U.S. economy. It could either succeed wildly or it could fail spectacularly. And so if it fails spectacularly, I'm sure he's going to try to come up with an explanation to try to massage the hurt and the pain. But I think the question is whether or not the American public will actually buy that.
Professor, it's great to have you back. Andra Gillespie at Emory University. We thank you for the insights. Coming up, we continue our focus on the global trade implications of these new tariffs with Sarah Bianchi, Chief Strategist, International Political Affairs at Evercore ISI. It's next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. Alongside Kaylee Lyons, I'm Joe Matthew in Washington as we watch futures continue to sink. S&P futures down almost 3.5%. NASDAQ 100 futures still down more than 4% with a visceral reaction to the president's tariff announcements. Joining us with the latest now on these tariffs, Bloomberg's Mike McKee with us from New York. Mike, how do you put a new global economic order into context this evening?
it's kind of hard because this is very confusing still in terms of what the actual application of tariffs will be. We still don't know exactly what they are going to do with Canada and Mexico, which are two of our biggest trading partners, and we're not sure what they mean in terms of reciprocal tariffs. Is it by goods or is it just a general tariff level? But if you look at the overall weighted average, once you include these reciprocal tariffs, you're moving to something like 25 to 35%. Wall Street economists are starting to put those numbers out. And that the Smoot-Hawley tariffs would pale in comparison because their average tariff was 20%. So this is going to be a very big deal, and we haven't heard from the other countries yet in terms of reciprocity, or retaliation. So it's kind of hard to see how this works out well for the United States.
Well, and given the quick turnaround time here, the 10% blanket rate going into effect Saturday, the reciprocal rate that's higher for many countries going into effect next week, Mike, knowing companies already tried to engage in as much front loading of inventory and purchasing as they could, how quickly is this going to start showing up in the data with so little time to adjust to this new reality?
Well, it'll probably show up in pricing data relatively quickly, perhaps more quickly than we anticipated given the tariff levels. But it'll also show up in other areas. It was pointed out that because of the complexity of all this, it's going to slow down port work, unloading imports at the ports, and that could back things up. We also don't know what the president's going to do with the de minimis taxes. You saw what a problem that caused when he first put those on and suspended them. Does that go forward, and how does that impact getting goods in and out of the country? So it's going to be a fairly quick thing that we see some effects. But while people are predicting maybe this is a recession, that would take some time because that's going to depend on people changing their behaviors.
All right, Bloomberg's Mike McKee, thank you so much, as always, for joining us here on this extended edition of Balance of Power. And adding her voice to the conversation now is Sarah Bianchi, Chief Strategist of International Political Affairs at Evercore ISI and former Deputy U.S. Trade Representative under the Biden administration. Sarah, it's always great to have you here on Bloomberg TV and radio. When we consider the kind of levels we are talking about here, at least for some countries, China, for example, with a rate that could be in total at 54% tariffs on those imports, how immediate of an impact do you expect that to have? And what's it actually going to do to the level of imports the United States is bringing in?
Well, it's certainly a very, very large impact, and not only on China, but so many other countries. Vietnam's rate is very high, Cambodia, the EU. I think where it is, you know, as was mentioned earlier on your show, our early calculations show we're going to get close to 30% weighted tariff average. That's you know, that's something we've never seen in this country. And they put the minimum, the universal, in place to try to prevent countries from diverting to other places these goods. So I think everybody's scrambling now. I do think this is more than a lot what the markets expected, and people are going to try to figure out how to adjust.
Well, I'm trying to figure out what's next here, Sarah. It is great to have you with us as we try to figure out exactly what the president is intending to happen next. Is it more likely that reciprocal tariffs will take effect on April 9th, or that we'll have a series of new trade deals with individual countries between now and then?
Well, that's a very, very short amount of time to do a trade deal. And I think perhaps you could see a couple of countries that would be able to pull something in. But what the president was talking about today is very complicated stuff. What types of, not just tariffs, but non-tariff barriers, farming, agriculture exports, how things are docked and ported. In Vietnam and Cambodia, they talked extensively about how China is using those countries to bank shop their products. Those aren't things that you can resolve very quickly. So I think that we may get a couple of announcements, and certainly countries are ready to go and eager to bring their offerings in. But I think the bulk of this, the EU, China, all of these are going to take a lot of time to negotiate. I think folks should be prepared to be patient.
Well, and as the president said in his remarks in the Rose Garden, that the way to get an exemption, or if you're seeking one, you should terminate your tariffs, calling on countries to drop their tariffs or those other non-tariff barriers. How much easier is that said than done, Sarah, especially for some of these emerging economies that you're referring to that are more heavily reliant on these levies as an actual source of revenue? Their economic structure is just different than ours.
Yeah, so some countries have very, very high tariff barriers, like India. That, in some ways, is complicated to drop back when we're in a WTO world, which I guess we sort of still are. Normally, you would offer that to other countries as well. I honestly think the non-tariff barriers can be more complicated to address. Some of the ones that they're talking about with the EU, overregulation, digital taxes, that stuff that requires legislatures to get involved. The EU, for example, has a lot of different countries with different stakes in various products. So I think it almost is the non-tariff barriers that are more challenging to work through.
You know, of course, the Biden administration kept Trump tariffs in place and even raised some of them, Sarah. With that in mind, I don't know if you think that was the right move or not, but could some of these be permanent?
Well, the Biden administration did keep a lot of the Trump tariffs and add to them in China. And that was a very, I think the biggest difference in this administration that we're seeing is this is global. This is a lot of allies, the EU, Canada, Mexico, very integrated supply chains. So a very different approach. The way President Trump thinks about it is very different. He wants to know what's in it for us in the United States, even with close allies, which is not really how Mr. Biden would have thought about it. So I think it's very, very different. Certainly, tariffs are easier to put on than they are to take off. And so for sure, I do think we will see some remnants of this system. A part of that is going to depend on how the economy performs and how much of a stomach President Trump has to kind of ride that through. But certainly, look, if we're at close to 30% from 3% where we were on the weighted tariff average, we're not going back to 3%. We might do something, I don't know if it's 8 or 10 or what it is, but we're not going back to where we were.
Well, Sarah, I want to go back to something that Mike McKee was referencing, which was the de minimis exemption. I would note, in addition to the executive order that implements these reciprocal tariffs, the president also signed an executive order today eliminating that de minimis exemption. That will be effective on May 2nd. Obviously, this is applicable to low-value parcels. How consequential is that decision in and of itself?
Well, they've been on a little bit back and forth on this. It's interesting. Yeah. I would have thought you would need a legislative fix for that, but they're a bit more. We'll see. We'll see how it sticks. Because there does seem to be a lot of back and forth in this space. Certainly, certain sectors, it's a really big issue for some of. There are companies with like low-priced clothing that a lot of it comes in under de minimis. So certain sectors very, very impacted if we do see this go into effect. But this one has wobbled around a little bit, so I'm not ready to say like this is for sure a done deal.
The White House has framed this. The president has framed this as leveling the playing field, creating a more fair economy for America. Sarah, will anything in your view positive come from this?
Well, certainly, look, I think the president is right to be focused on certain sectors where we do need a robust supply chain. I think in some ways this Made in America thrust is not that different in some ways directionally than what President Biden tried to talk about with the CHIPS Act and the Inflation Reduction Act. We do, I think there is a case to be made that we do need to be making more here, but also with allies, and we ought to look at our supply chains post-COVID. So, and I do think there's something to be said for, of course, some of these reciprocal tariffs aren't fair. I think the President Trump has pointed out some really good issues. I would just say, that the outcome, the policy response may be a little bit more than is needed to address some of them.
Sarah Bianchi, Chief Strategist of International Political Affairs at Evercore ISI. Thank you, Sarah, for the insights. We've got a lot ahead coming up tomorrow morning, 8:30 a.m. Eastern. Make sure to tune into Bloomberg Surveillance for a conversation with Commerce Secretary Howard Lutnick.
Looking forward to that one, and thank you so much for being with us on this special extended edition of Balance of Power as we finally got the long-awaited tariff announcements from President Trump. We'll be back with more analysis tomorrow right here on Bloomberg TV and radio.